Hello and welcome back to part 2 of Introduction to HyroTrader. My name is Renee Louise, but you can call me V for Victory. And today we're going to go through how to use Bybit right from the start. So let's go. So welcome to Bybit. So you've got your login from HyroTrader, from the HyroTrader platform, entered your password, now you're at the main page. So most of this stuff you won't have to use right now, but just spend some time having a look around. The amazing thing about Bybit, it has so much functionality. There's so many different things that you can do on there. Everything from spot to derivatives. There's always different bots, like so much different stuff that you can do. So have a little bit of a look around. But for the challenge, what we want to do is we want to get to demo trading. So what we're going to do is we're going to go up to the little face over here, and then we're going to scroll all the way down to demo trading. So the best thing about this platform is that in demo trading you can do exactly the same thing you'd be able to do on the normal platform. So to give you a quick rundown, we're going to start with your main trading platform area, which is over here, which is all the good stuff where you place the trades. So we can use cross margin or isolated margin. So I use either one of these two. So isolated margin is when you want to do one trade and use just a set amount of margin just for that trade. It will limit the amount of leverage that you can do in the amount of money that you can trade, but it's much safer that way because if anything goes wrong with that one trade, it's not going to affect any of the rest of your portfolio. Cross margin is when you actually use the collateral from your entire margin between all of your different trades. So it's good and it gives you more margin or more access to more margin, but it's also dangerous because if you get liquidated on one, you can then cascade into your other different accounts. So you've really got to think about if you want to be a little bit more safe or have access to a little bit more of your collateral. So you've really got to weigh that up. Next section is the leverage. So there's a massive access to leverage here on Bybit, and when I first started trading, I got completely wrecked trying to use too much leverage. It wasn't until a couple of years later and I discovered my style, and me being a very short-term trader, I much prefer scalping. So what I do is I use much smaller amounts of actual collateral, and then I use a higher leverage. And I find that using high leverage on something like Bitcoin and Ethereum that don't move as much as other altcoins, I can still make good returns even on a very small move. Because we all know, even on a good day, most of the time Bitcoin will only move like 1 or 2%. So 1 or 2% on 100x is 100% return. So depending on your style, obviously if you're holding trades for a long period of time, I wouldn't recommend 100x because it is dangerous, and especially when it comes to trading with real money, it can make you a target for liquidation hunts, which is something that we can go on to a little bit later. But basically the market makers who create the markets can see those stops where you've got your accounts, and they can come and hunt those liquidation points, especially if you're at 50, 100x. So it's very dangerous for holding long term. Most of the time a swing trade or a spot trade that I would hold, I'd only be using like maybe 3 to 10x, depending on the volatility of the coin. So it's really up to you to figure out how long you're holding the coin, how much you want to risk, and adjust your leverage the appropriate way. Next, we've got the different type of orders that you can place. Limit orders are basically when you want to enter at an exact certain price. So you can add a limit order to buy underneath down here. When you think that it's going to retrace to that point, it will buy it for you. Same thing if you're going short, you can put your limit orders above, and when it hits that point, it will then sell for you. Most of the time, because I'm a short-term trader, I use market orders. The difference also between the two of them is that you will pay more fees if you're using market orders as opposed to a limit order. So you're called a maker if you are making the market and placing a limit order, and you're a taker if you're making a market order. And so yeah, again, that is a difference as well. You will pay more fees if you're placing market orders. The other one is conditional, which is if you want to hit a trigger price and then create a separate trade after it hits a trigger price. Things that you can do to use this is for like stop losses, take profits, but in general for me, I actually use the take profit stop loss area, which we'll get to in a second. So say we want to place a market order, Just going to do this as an example. That's going to buy right now at this second. So what I'm going to do is I can also choose by value or by quantity. So for me, I prefer to use by value because I think in USDT, I think in US dollars. So, but if you want to think in terms of Bitcoin, like I want to buy 1 Bitcoin, 2 Bitcoin, you can place it that way as well. But I prefer to think in stablecoin. You can also adjust your quantity automatically by just pressing the percentage. But for me, if you're following a plan, I'd rather just enter it manually, and then it's also nice round numbers for your head. But if you want to, you can always do that much for your portfolio. Next thing you want to do is take profit stop loss. So we are going short right now. And then what I'm going to do is I'm going to do my stop loss. My stop loss is at 25%. So in general, I just have a 25% stop loss depending on the volatility of the market. It has been quite volatile the last couple of days, so I will go up to 50% if it's within my risk parameters. I will adjust my actual amount up or down depending on that. But right now, I'm just going to do 25 and then see how it goes. So we're going to sell short. Perfect. So that's actually pretty much where I would put my stop loss as it is. So I again, being a short-term trader, I'm thinking in very short moves, like 0.5% move. So I want to see a 0.5% gain or up to 1% usually. So this way I can actually adjust my mark as well. I'm gonna put this one up a little bit. And then what I'm going to do is, say if you want to add additional stop losses, adjust your stop losses, add your take profits, you can actually add them here as well. So that TPSL is your take profit stop loss. I'm going to go in here. And so I'm going to add my take profit. I'm actually not going to do an entire position. I'm going to do a partial position. So what I'm going to do is I'm going to take 25% partial position take profit at 25%. Confirm, and you can add additional ones here as well. But you can see that's come up right here. So I've got my stop loss and then my first take profit. So you can go through and keep adding and adjusting these as much as you want. I'm going to add another stop loss. I'm going to add 25%, take profit at 50%, confirm. And then let's do an entire position. So I'm going to do 100%. And this will be the entire position at 100% win. Cool. So now if you can see on the screen, we've got my stop loss all at that much. So I've got my stop loss all just above my last local high. Then I've got 2 take profits and a final profit, which will take all. So you can play around with these and like adjust them to as much as you want. I usually do mine in 25% increments. That's just me. And so I actually do my stop losses and my take profits in both ways. So and that way you're not taking the full stop loss a lot of the time. It's kind of quiet markets now. It's 3:30 in the afternoon where I am, and so London opens in about an hour and a half, so London pre-market. So it's very quiet right now. Asian market's dead, and London's very far, so I'm not expecting big moves right now. Bitcoin just hit $64,000 this morning, so it's been a very, very exciting few days. So I am taking a short, but again, I'm a day trader, so I go up and I go down. I've had a number of really great moves in the last few days, going both up and down. Down, definitely got to have those very close take profits because they haven't been going down for very much. So moving down to the bottom here, we can see our trade. So you can see what we're doing. It's Bitcoin, USDT, so that's the perpetual future. Now we've got cross leverage with 100x. And that is, with the margin, it's 1.6 Bitcoin, which is about $100,000. So I'm risking $1,000, and then that leverage gets me $100,000. Entry price, mark price. So entry price is what I entered at, mark price is the current price, and then it gives you the liquidation point as well if you didn't have a stop loss when you would actually get liquidated on your whole amount. This is your margin that is required to open your trade, and then you have the minimum margin as well. We've got our unrealized P&L and then a realized P&L. So basically, why it's already negative even though nothing's even happened is because of the fees. So it's every time you place a trade, and especially since I ordered a market trade, I've already been charged the fees to open the account. And I'm almost gonna hit my stop loss. Oh no. Is it gonna hold? Is it gonna hold? When you're using leverage, the other thing you need to think about is your fees. So there is two different types of fees. You've got here, as we've discussed before, this is the actual fee for placing the order. So every time you buy or sell a token, you will get charged a fee. And so this is why we're in the negative here, even though we haven't actually closed out any part of the trade. So this transaction of buying the $100,000 worth of tokens has cost me $55 just to open the trade before. So I need to make at least $55 just to break even on the trade, and then you'll actually get charged another fee when you sell. So it's actually closer to like $100. So it'd be $50 in, $50 out. So if you don't make more than $100, the fees are just going to eat you up. So you need to make sure if you're trying to like scalp with high leverage, you still need to make at least a little bit, otherwise the fees are just going to kill you. The other one you need to think about though is your funding rate. So basically you get a funding fee every 8 hours. It's basically interest on the amount of money that you're borrowing to actually place the trade. So you get a transaction fee plus you have the borrowing fee. So right now you can see the funding fee is up here and it's positive. So basically you're getting charged this much to hold your trades every 8 hours. So for me this morning, it was actually funny, the funding fee went over and because I was in a big short, I actually ended up in profit already, even though I hadn't actually done anything on the trade because the funding fee is so high. I actually got paid for holding my short. Basically the way it works is that if the majority of the market is going one direction, the funding fee will be positive and you will get charged money for borrowing the money to place the trades. But if you go short in a very strong bull market, you actually get paid for holding your trade going negative. So that's actually what happened to me this morning with my trade. I actually got paid for holding my short. So that was nice. I got my funding fee back and it paid for my transaction fees. So that was actually good. This is a TradingView chart, which I'm sure we're all very familiar with. I much prefer TradingView. I do all of my actual analysis on TradingView and then I just do the actual implementation of my trades on Bybit. It's really good. It's just, it doesn't have all my favorite indicators on here. So I still use TradingView as well, even though these are TradingView charts. So it's great because I have all the same drawing tools, but it's just they don't have all of the specialty indicators that I do use on my charts. Moving down to the bottom, we've got the different sections as well. So you've got your positions, and then we have current orders, which is my stop losses and my take profits, which will be here. And you can see all of your trades that have not been placed yet. And then you have your profit and loss. Yay. And that's about it. That's a very basic entry-level overview of the Bybit platform, all the functionality, all the amazing stuff that we can do. It's very modern, it's very easy to use, has so much functionality. I really love it. It is my favorite platform, and I've pretty much used every single exchange that's out there. So stay tuned to next time when we'll go over to some actual technical analysis and basics of how to read a chart. So stay tuned. See ya.